Hey guys, so today I'm going to talk about what are bonds and how you can acquire bonds. So bonds and stocks, they're often mentioned together all the time. So pretty much as you guys already know, if you don't, a stock is when you're buying ownership or shares in a company, and if the company does well, you benefit through the price appreciation and possibly even dividends. So stocks, they are a higher risk, but because their value can rise or fall significantly, depending on the company's performance on the market. So the potential is, of course, higher returns with stocks over the long term, but bonds are a lot more safe. So bonds are actually debt. So when you buy a bond, right, you're actually lending money to a company, the government, or an organization. So in return, what they can do is they promise you, one, they don't promise you, but they promise to pay you interest called coupons regularly, or they repay your original investment, which is the principal, at the bond's maturity date. So bonds are very low risk. They're lower risk than stocks, especially like government bonds, but you can still lose value with them because the interest rates sometimes rise, or sometimes the person who issues the bonds defaults on the payment. So it's lower returns than stocks, of course, but you get more predictable income, right? So bonds, you lend money, it's debt, you get steady income, is generally safer. And the stocks, you actually own part of a company. You get equity and you get potential growth, but it's more risky. So as you guys know, they pay fixed interest, the maturity date, right? So at the end of the bond's term, the issuer, they'll repay you the original amount, which is the principal. So they also can balance your investment portfolio. So let's say you have a bunch of stocks, maybe some is in the renewable energy, some is in the tech sector, some is in the bank sector. If you put some bonds in there, it'll throw off some of the risk of your portfolio. So it's going to generally make your portfolio a lot safer because you actually are paying the full amount for the bond, and then they're going to keep paying you a certain amount back for the money that you had paid for the bond. Some examples, guys, of bonds are government bonds. So uh, treasuries in the U.S., right? If you're in Canada, Canada savings bonds in Canada. Example, 10-year U.S. Treasury bond, right? So you lend money to the U.S. government for 10 years, and they pay you interest every 6 months until the maturity date. It's safer because governments, they're a lot less likely to default. There's also municipal bonds. So a city, for example, a city issues a bond to build a new hospital or school. Investors, they buy the bond, and the city pays them back with interest. So you accumulate interest on your payments, on their payments, and then you benefit by the interest. There's also corporate bonds. So for example, Apple might issue a corporate bond to raise money for new products, and you lend Apple money, and they pay you regular interest until they repay the bond at the maturity rate, at the maturity date. And there's also savings bonds, right? So if you're in Canada, right, a Canada savings bond, or if you're in the U.S., a U.S. Series Double E savings bond. They're very low risk and they're backed by the government. And then there's high yield junk bonds. So high yield junk bonds are smaller or riskier. The company issues a bond with a higher interest rate to attract investors, right? Investors see the interest rates high, they want to get in on that. So it's a lot riskier, but you get higher potential returns, right? So if I break it down to you guys, so the government, you have the safest. Corporate bonds, you have higher risk, higher reward. And then junk bonds is the most riskiest, but you have very high interest you can collect. So a great way how to get into these guys. So if you want to know how to get into them, remember, I have to put this down. I'm not a financial advisor, so make sure you do your research as well. But a great way to get into this is you can buy bonds directly, right? So if you're in Canada, you can buy federal and provincial bonds through banks and brokerages. And if you're in the U.S., you can buy U.S. treasuries directly from the government at treasurydirect.gov. Corporate bonds, they can be bought through a brokerage account like Questrade, TD Direct, Fidelity, or Vanguard, and you'll see listings of bonds with their maturity dates, interest rates, coupons, and prices. And then there's also bond ETFs, right? They're exchange traded funds, just like stock ETFs. They're the best way for beginners. So, for example, if you're in Canada, you have BMO aggregate bond index funds. You have iShare Core Canadian Universe bond index ETFs. And you also have iShare Core US Aggregate Bond ETFs or Vanguard Total Bond Market if you're in the US. Uh, Mutual funds as well. Bond mutual funds are offered by banks and investment firms as well. Professional managers, they choose a mix of government and corporate bonds for you. And then there's also retirement accounts, like you can hold bonds and bond funds inside of your RRSP or TFSA if you're in Canada, or if you're in America, it's 401k and IRA, Roth IRA account, which gives you tax advantages. So if you're a beginner, you might not want to pick individual stocks. It's like even with the regular stocks, or you might not want to pick individual bonds. So you can start with the bond ETFs or mutual funds, since they're very simple, they're low cost, and they're diversified. So buying individual bonds there, it's a lot more advanced, and usually it makes sense if you're investing a very large amount. So just start with the bond ETFs, mutual fund ETFs if you're interested in bonds. Make sure you do your financial research. Remember, I'm not a financial advisor, so get started with that if you're looking into it. Do more research about bonds. It's a lot less risk than the stocks, but it's a great way to also balance your investment portfolio, guys. So if you like this video, leave a comment below, subscribe, like, and I'll see you guys next time. Peace.